Hello, everyone. This is Liz Faircloth. Excited to have you joining us for tonight's webinar. I'm going to be bringing on the wonderful Camilla and Mandy here to join me on this syndicate or not to syndicate topic. So just welcome. So excited to have you all here. And would love to, we haven't done an evening webinar in a while. So glad you can join us. And what I'd love for you all to share in the chat box as I bring my amazing co-pilots here with me on the webinar is please share in the chat box, what is your name and what you're looking forward to getting out of tonight. And you can also share where you're from. But welcome, thank you for being with us. And I'm gonna get my two lovely ladies here with me here. So just bear with me as I'm finding them and managing this. Please share in the chat box where you're calling in from, your name, and what you're excited about learning tonight. That would be wonderful. All right, Mandy, I'm getting you in a moment here, my friend. Bear with me. All right. Okay, Mandy should be here. Let me find Camilla. She's not here yet. I don't see her. Hey, Mandy, hopefully you can talk.
Hi.
How are you?
Not start your video because the host has stopped it.
Yeah, I know. I don't know why it does that. But I'm gonna what I'm gonna do is make you I'm gonna make you a co-host and you should be okay. I don't know why it's doing that.
I did put on makeup for you today, Liz.
I'm so excited. I actually put some makeup on. I usually don't look this good in the evening.
Oh, that's so good. Hi, friend.
How are you?
Oh, it's been too long.
It has been too long. We need to catch up.
Yes.
There's a lot that's going on that I want to catch up.
So many things, for sure.
Congrats on Go Abundance and being the CEO of another wonderful organization that I'm a part of. I'm excited to hear how that's going. I'm really excited for you.
Yeah, thank you. I feel like we stand for very similar things that InvestHER does, and I'm just excited to be a big part of both organizations.
Yes,
so
that's why I'm excited to talk to you. I want to best support you guys and best support
good.
You.
Right back at you.
But yeah, thank you everyone for being here. This is Miss Mandy McAllister. I'm going to introduce her in a moment. Oh, there's Camilla. I'm going to get her to come on. Hopefully not an issue. I have way too many papers in front of me. You should look at my desk. It's like not right how many papers I have going on. But welcome everyone as you're joining with us. Hey Camilla, hopefully you can share your screen. If not, I'm going to promote you as well because that seems to be the theme.
It says I can't do my video.
Yeah, I don't know.
And I gotta have video for this.
I looked into this after my last webinar and I didn't seem to figure it out. So I still can't figure it out, but that's okay. Are you able to now? Yes, you can. Oh,
are you ready? Are you ready?
You look like a punk.
Wow.
This is a debate. I'm ready for this.
Is that your debate look? Is that what people that debate look like?
I don't know. I'm just like, I'm up for a fight, right?
Oh, yeah. All right.
Gotcha.
Hat. I love it. We're keeping things real here.
So good.
I like to have the other way, actually. Totally keep it the other way. I think that really helps.
My ponytail's on this side, so maybe I should go with
a lot going on. So as you can see, we're going to have some fun tonight. Going to get into syndicating and not syndicating. I'm going to give everyone here a moment, but welcome, Camilla. How are you?
I'm great. How are you?
Doing great. I got my snowman mug here.
Oh, fun. Yeah. I'm so jealous of all the places that are getting snow. I live in Texas. We don't get snow and I just need it. I need it.
Forgive me for not feeling bad for you.
You should. I want some snow.
You want some snow?
Come on up.
And before we start, please share in the chat box where you're calling in from. If you are getting snow, you're not getting snow, and what you're excited about tonight. Because we do a lot of presentations, we do a lot of webinars, but as we thought about tonight, and we talked about this topic, and I'll give a little prelude to that. we kind of need to just have like a roundtable discussion. And I'm really excited to have Mandy, Camilla. They are friends, they're colleagues. They're such great leaders in the space. So I'm excited to be joined by them tonight. And I'll be asking more questions and adding my 2 cents, but excited to have these 2 amazing women on with us. So thank you both for being on.
So happy to be here.
So excited for the debate. Switch positions. Okay, there you go. All right, good stuff. So you know how we roll with InvestHER. I'd like to start on time. I want to end on time. This is Eastern time, and there's not many women I like to be joined by if I'm going to take my evening and actually spend it with all of you. So I'm excited to be with both of you on this lovely evening. I have a few slides to share with those who are new to our community, a little bit about what we stand for, what we're about with InvestHER. Then I'm going to introduce Mandy and Camilla to all of you. And then we're going to get into, got some questions, got some, you know how these things go. It's like a podcast. I prep some questions and you never know where the wind will turn. So you want to be flexible, but you got to have a game plan too. You can't just wing it. So with that, thanks for being here. No snow yet. Okay. You're outside of Pittsburgh. All right. Yeah. So yeah, I got you. But it's cold. I hear you. It is cold here in Pennsylvania. All right. I'm going to share my screen so we can get to the topic and get these 2 amazing women. And then unfortunately, Avery will not be with us, but we will miss her. And certainly Camilla and Mandy have turned up their energy even more. So it's like Avery's here with us too. So a little bit of our mission statement. So I'm going to jump into a few slides and then we'll jump into the topic. So our mission is all about empowering women in real estate to live a financially free and balanced life on their own terms. What we're all about is creating an intimate global platform, right? And a community where women are able to really cultivate those deep relationships. And we do that in a lot of different ways. And certainly through free events like this, online and in person. We do that through courses coming next year, live events, our membership. I'll share a little bit about our Strive tonight, and obviously investment opportunities that these fine ladies have, investment opportunities InvestHER is involved in, and all the many, many women you meet. That's the wonderful thing about community. So what we are all about, for those who are new to our community, if you're new to our community, just put new in the chat box. Really welcome. And it's nice to have, I should put the mic in front of me. Let me move the mic in front of me now on a basis of the podcast conversation. But if you're new, thank you for being here. So quickly, our podcast is, we are published by Bigger Pockets, and we have a podcast that's released twice a week. We're about 55,000 downloads at this point, and women and men listen to us in 42 countries, which is really neat. Our meetups are, we're at 60 right now, and we have locations in the US, we have locations in Canada, and that's all about women locally supporting each other and really giving and getting on a local level. So check those out. Hopefully you'll have one in your area. If not, we're always open to expanding as well. Our Strive members, so I'm going to speak to this in a moment, but this is for our experienced women who've done 5 to 10 deals. And I'm going to just share some quick tips because we're in the middle of open doors. So it would behoove me not to share what's happening there. I'm going to share that in a moment though. Facebook group, that is our free kind of online forum, if you will. We started with like me, Andressa, and like 5 friends. And we have 14,000 women now that are really active in our Facebook group. And it's all about giving and getting and not spamming. We're really tight to that because we really don't want it to get noisy. Events, we're always doing events. We usually have 2 events. This will be our last event for the year in terms of that element, but we are always doing events locally and online. And we also have a team, our InvestHER EXP org for agents who are also looking to build their own wealth, which is really important, that you're not building everyone else's wealth, that you're building your own, which is what we stand for with everything we're up to. And we're also investors like yourselves, Mandy, Camilla, anyone that is a friend, a partner, a colleague, part of our tribe on some level. It's really about being an investor yourself, right? And with that, I want to just share quickly, and then we're going to jump into this topic, that our Strive is open. Camilla and Mandy are both 2 of our pod mentors. And we open doors twice a year. We don't have like a revolving door just because we've actually put pods together and groups of women together. So you can't do that all the time. So it's now until December 16th. Really excited about that. And just quickly, I don't have a lot of slides, but I just have a couple of quick slides to share with you. And I'm going to share a little bit what Mandy and Camilla will be doing with their pods. And actually, Mandy has 2 pods. We have her busy. So a couple of things about what Strive is, just in a nutshell, it is our one-of-a-kind membership, and it's designed for women who have done 5 to 10 deals, and they're really looking to grow their portfolio, grow themselves, and not just for themselves, but for their families. And what it's really about is women who are looking to potentially build systems in their processes in their companies, or build a team. I should say, and build a team. But it's really about women just tired of being a solopreneur and just tired of doing it themselves. And they really want to build around them. What I think is really cool with Strive that I've seen the last 2 years that we've had Strive is it's deepening relationships. Is a really neat tribe that is formed of women just having their back, giving and getting, and also creating friendships, which is really special, but it's also about elevating their portfolio. So we have a book club, we have master classes. You can check this out on our website. I'm not going to go through everything, but we do masterminds. We do masterminds. Andres and I do masterminds once a month, and then we do a coaching call once a month, and then we have a bunch of really neat things happening. I think what's really unique is our pods, and Camilla and Mandy have been. How long have you been pod mentors? Like at least a year and a half. I feel like you guys both of you are part of the.
This will be my 4th semester that we're going into.
Okay. How about you, Camilla?
Yeah, I think, yeah.
3rd or 4th?
Yeah, same.
Yeah,
same with Mandy, going into my 4th.
So Camilla actually did a pod, and a pod is basically a 6-month cycle where you have it's an educational call and an accountability call. And so you did syndication, which we're going to be talking about here tonight, last cycle. And now you'll be you'll be teaching and supporting and connecting with the women in the pod to hold them accountable to learning new information about the topic, but also more importantly, putting it into action and holding everyone accountable to it, right? So it's going to be also about raising private money this cycle. I'm really excited about that. So we'll probably tie that in a little bit of syndication tonight, because we're going to need to talk about that. And Mandy, you have 2 pods you're doing. You've done from single family to multifamily. What we find is a lot of women in our community who are looking for accountability, mentorship, and masterminding are transitioning, right? They're looking to expand their portfolio. So you'll be back to do that. And then we really listen to our current Strive members and saying, we need more creative ways to put deals together, right? And opportunities together. So we put together a new pod around putting deals together, pretty much, especially in today's culture and economy and everything that's happening. Creativity is the name of the game. So I'm excited about that new one that we'll be doing with you. So with that, I want to just share that quickly. Anything to add from the 2 of you, and then we'll jump into syndicate or not syndicate here tonight.
Well, when you were talking about Camilla's pod, I feel like there's a Bigger Pockets book about raising private capital.
Yes, there is. Some
really
guy I
good.
know.
That I read that one time. Like that's
some guy I know like wrote that,
Do you know that people sometimes say, is that your brother, Matt? I'm like, no,
your brother.
It's so awkward. I'm like, if it's my brother, that's even, now we have a real interesting conversation to have.
That's awesome. Well, I have really loved the chance to help women usher the growth of, once you get comfortable in single family, the next right step might be to find scale with a single transaction. So that has been really fun to teach. And I could not be more excited to usher in this deal partnership and structure, because, a big piece of how I do deals is a little bit creative. And we're going to dive into that here because you can lock arms with people, do partnerships, So very excited to bring these 4 mentors who are really incredible. I'm going to learn from them as we go through. So could not be more pumped to be a part of that.
Yeah, thank you for all you do, Mandy. And come on, anything to add or share is your experience as a pod mentor, real quick?
Yeah, I loved it. And I love what we're doing now. Like we did syndication 101, and I taught, that and learned that with other women, but we got the feedback that they really wanted to dive deep into raising private money. So I'm super excited about that, because that's my superpower too. So I'm excited to really have other women learn how to do this and actually do it, not just learn, but do it.
Yeah. And I just, I want to get to the topic of syndication. And I think what we stand for with our Strive membership, my son is very quietly in my office. I'm like, seriously. what we really stand upon with our community, and why I love having our these two amazing women and our pod mentors, is that no one person knows everything. No one person has all the answers. I'm not a big fan of that structure. Not that there's anything wrong with any of that out there, but that's just not what Andres and I built when we built Strive, and not what we stand for InvestHER. So there's so many women who know their stuff, and that's really what's special about what we're up to with Strive, and that's what we stand for our community. So I'll throw the membership link. If you literally go to our site, you can just learn more about our membership there. Doors are open till Friday, so I hope you can join us. It is application only, because we really want the right women joining. We just can't just have it open. So please come in the arena and play with us. So without further ado, let's rock and roll to this topic of to syndicate or not syndicate. I love your hat. Camilla, I might need to take a picture and put this somewhere. So when I'm having a tough day, which we all have, I'm just going to smile. So why I love this topic, and please, we're going to make this, I have questions prepped, like we do for those who are not familiar with our community. We love conversation. We love getting into real questions that aren't staged. So please put those in the Q&A spot if you can, because then I can ensure because our chat box will sometimes be very busy. Women like to chat and throw things in there. So put it in the Q&A box, because you're going to get questions along the way. I'll take breaks. I know these two can deal with that. I know I'm not going to, it's not going to interrupt. So please put it in the Q&A box. So let's get into why we even are here to talk about to syndicate or not syndicate. I forget, we were on our pod mentor connection call. That's what we were doing. We're kind of talking about our next cycle, doing some, we connect with all the pod mentors every quarter to see what's working, what's not, ideas, so we keep engaged. And somehow we got into the topic of syndicating, right? And then you and I, Mandy, we're going back and forth a little bit. And I'm like, this is a great topic for a webinar. So let's do it. And that's what kind of sparked this. So when it comes to I want you both to introduce yourselves too. But as you talk about, I know Mandy here I want you to introduce yourself. You have a lot more experience on the JVing side of it. I don't think you've syndicated a deal, correct?
I have. I've done
You
both,
have.
yeah. But
You've
I've
done
done
both.
far more joint venture than I have syndicated.
Okay. Gotcha. Sorry about that. But I want Mandy to share a little bit about her background, and tying in where she falls on syndicating or not, or her just general kind of opening remarks, if you will. And then Camilla, I'll have you introduce yourself. And I know you've had such a journey, right? From single family to construction to everything in between, and then now, more on the larger projects and various niches too. So when you both share who you are, tie in a little bit of what your thoughts are in general, and then we'll just dive into the topic itself and go from there. So Mandy, I'll start with you.
Sure. Hi, I'm Mandy. Very excited to be with my friend today. I started investing. I actually bought a fourplex when my son was born, thinking that would be his college fund. He's now 6.5 years old. So that's about how long I've been buying real estate with express purpose of investment. I started with a fourplex, and it blew my mind that, oh my God, automatic scale. Oh my God, this was one transaction and now I have 4, right? And then I bought a 6 and then a 10 and then into a syndication as a limited partner, and then a 53 and then a 38. And I kind of, went down the learning multifamily, larger multifamily acquisition. The bulk of the learning sometimes tends to be slated towards syndication, because if you're going to be buying a 400 unit apartment building for $30 million, very, very few people can do that, right? So syndication is what's taught. But, the way I looked at things, I realized I wanted to buy and hold for my own accounts. And then that brought me to joint venture. These kind of smaller multis, call it 5 units to about 50 units, is my favorite wheelhouse to invest in. As of August 2021, I am a single mama who retired herself from her day job with real estate. I'm saying Camilla and I are living very parallel lives in that way. So we've been, right next to each other, locked arms in that way. And just actually in the last couple months, I took on a role of CEO of GoBundance Women. So I got a real full plate, and it's all about helping women, and it's all about, wealth building. So let's go.
Love it. All right, good stuff. Desiree is saying, congratulations. Camilla, tell us a little about you and what your general thoughts are on this lovely topic of syndication. Then we'll dive into like pros and cons, risks and benefits.
Yeah. So when we were all talking about this as a pod, and then it came out that, it's going to be like a debate. I'm like, oh, I'm showing up for this. That's why I got a hat. I don't usually wear a hat sideways like this. I feel like I should bring out my Jersey accent too.
Don't make fun of Jersey people now. I'm a Jersey girl.
That was just for you, Liz.
I love that.
Sorry. Hey everyone, Camilla here. So I've been investing in real estate a little bit longer than Mandy. I got my first property at 22. And so that makes it, 21 years. I'm 43 now. So I've been investing for 21 years in real estate. And you would think I'd be a lot further ahead than I was, but guess what, y'all? I did it all myself for the first 15 years and did not learn how to partner until these last 5 years. And the difference between where I am, the 5 years that I started partnering and where I am and the trajectory it took me on, and the first 15 years of DIYing, it's just night and day. Like DIYing got me hardly anywhere. Partnering got me really, really far. So I'm a partner in almost 1,500 units now, about $200 million worth of real estate, and almost all that is through syndication. And I have fallen in love with syndication and the whole process, and especially the passive investor part of it. And so I educate passive investors on how to get involved in projects. And then I go out and I vet different teams and different markets and different deals, and I bring them back to my investors, and we go and we invest together. So far we've invested in a lot of multifamily. About 80% of my portfolio is large multifamily. I have an assisted living new build we're working on. I have just did an Airbnb fund, so like a short-term rental fund. So that's going to be a new project, be exciting. And then looking to add self-storage to that as well, probably next year. So we're just really excited about the trajectory and where we're headed. And I'm a mom of 5, and my kiddos, we do flips together. So we'll go out and we'll flip a house occasionally. Like we're not like some women are amazing. They do like 100 flips a year. We do like one every other year. And because we DIY it, and we DIY it on purpose. It's not the best way to make money. I just told you that, like, don't DIY everything unless you need to teach your kids how to work and you need to get your kids investing. Then DIYing is a fantastic way to go in terms of that. So, and we actually just got an offer. We're under contract on our flip that we just finished up. Yay. And so we celebrated that with the kids today, that we got an offer on that. And so that will close in a couple of weeks.
Good stuff.
That's exciting.
Awesome. All right. So we got a lot. You get these 2 fantastic women who have such breadth of experience in different areas. From a syndication perspective, I'm just going to quickly share that we really scaled our business probably since 2010 until now, really syndicating. And we started with we called it DeRosa Capital 4, and it was about 14 units we syndicated. And so you can syndicate 14 units, you can syndicate. Our last one was 670 units, right? So there's a variance of size, but think of syndication as you're pulling money together. It's a legal term because you're filing with the SEC, and you're really able to build with passive investors as limited partners to get into larger projects that you may not be able to get into as just by your own. Very simplistic definition of it, right? But that's in a sense, right, what syndication is. And there's a lot of things you have to be very careful on. Accredited, non-accredited, we can get into all of that. But regardless of that, let's talk about, and then you have JV. You can, it's one of the ways Andres and I first started partnering is that we were JVs, we did a JV partnership together. We didn't start a new LLC or anything. So, there's so many people. I was talking to someone the other day and they're like, I feel like the next thing for me is to syndicate. Then I was talking with her and I'm like, doesn't sound like that's the next thing for you. I think you should keep doing what you're doing. Sounds like you're doing it successfully. I think the first thing just to share, and this is my complete 2 cents, I'd love to hear both of your perspectives. I don't think syndication is always necessarily a trajectory of a journey. You start here and it ends in syndication. I don't believe that that's the case. Syndication is a business. It is a a way to get into larger assets? Absolutely. I don't think it's necessarily like it's Z and on from A to Z. I think it's a strategy. I don't think it's the strategy. That's just my 2 cents from coming from someone who's literally built their business through syndicating. I don't know what your both thoughts are on that. I think that's one thing that's out there that women will hear, oh, it's the thing I should be doing, versus like, I don't think there's a should there. That's my 2 cents.
I totally think that is if you take nothing else away from this webinar, I think that point is my absolute favorite, because it's not always the answer to the puzzle, right? Like the way I look at syndication, I have been on the GP side, I have been on the LP side, I have mostly done these joint ventures, but the way I look at syndication is basically I'm selling off shares of 70 or 80% of my deal. So the way I choose to look at syndication is if I can't figure out how to do the deal on my own or with a partner, the next best way is to then sell off 70 or 80% of it in those shares by syndicating. So I think it's a really great tool to have in your toolbox, but it's, not everything is a nail and you are a hammer,
Yeah, I like that. Ooh, I like that.
Yeah.
What do you think, Camilla?
You're absolutely right. The syndication is not the ultimate like goal, right? And I think that it's not like, okay, you start with a single family home and then the next step is this. It's not a linear path to end with syndication at the end. You're right. Syndication is one strategy. It works for a lot of things, but it doesn't work for other things. And Mandy's point is absolutely true. You are giving up around about 70% of the profit to passive investors, because you have to prioritize them. You have to make sure that they're taken care of, and you have to like offer this. So if you want to do big deals, so it's really best for the really big deals. Like if you have deals that are, I would say 5 million and under, I would try to JV those. I would only syndicate things that are a lot bigger, that you are going to absolutely need a bunch more people in. And we can talk about like the partners and what they do and why you don't want so many in a JV, but it's definitely not the ultimate goal. So don't put anyone up on a pedestal that's doing syndication. It's just simply a strategy that gets a lot of noise, because we have to make a lot of noise. We have to make a lot of noise to get people excited and involved, right? I have to be out. I have to be on social media every day. I have to be doing my podcast. I have to be talking to people all the time, because I need to be raising money and getting more people involved into the deal in order to even do these deals. So that's the reason you probably see it all the time and feel like, oh, maybe I should be doing that.
It's a really good point. So let's go back to JV. Mandy, explain what JV is, maybe one of your first JV deals. How did you structure it? Pros and cons, risks and benefits. Yeah. Shelly, thanks for asking. And there's no stupid question. There's no question that you shouldn't ask. That's literally why we created the real estate investor community, because you go to events and I feel like women just don't ask the questions. So ask anything that comes to your mind. So I appreciate you asking that, Shelly, about what does JV even stand for. So go for it, Mandy.
Let's zoom out just a little bit. So the JV is joint venture. One of the requirements of having a legal joint venture is that everyone has to be actively involved in a deal, right? So if Liz and I are putting together a deal, we have to have some level, each of us have to have some level of active involvement. But if Camilla says, hey, I want to give you $100,000, will you put this $100,000 to work? And I don't want to do any active work. Well, by definition, in that case, it is not a joint venture anymore. We are now required by SEC laws to file the exemption of a syndication if we're taking money and promising a return. So a joint venture only happens if everybody is actively involved. So that's an important piece to know too. So in terms of, my first joint venture, kind of a reason for a joint venture is I learned about non-recourse debt through Fannie Mae and Freddie Mac. What non-recourse means is that I'm not personally liable. If it hits the fan, then they're not going to come after me for whatever extra is owed on the loan if I'm underwater. So Google the Freddie Mac small balance loan program. When I'm done talking, I'll put it in the chat because I can't think and type at the same time. Freddie Mac small balance loan program. That's one of the easiest ones to get into. You have to borrow at least $1 million in order to get into it. So I didn't want to borrow $1 million on my own of my very first larger deal. So I banded arms with two dudes who wanted to walk in the same direction as me, who had this idea of let's buy and hold for the longer term on this better debt. One other kind of thing about syndication versus joint venture that I think joint venture gives you a little more flexibility is in these syndications, just kind of thinking through the numbers, the way you get the biggest return on your money is if we return all your capital more quickly, right? So you have a reinvestment risk in 2 or 3, 4 years. Usually they underwrite plans to about 5 years of a hold time. If you have an intention of buying and holding forever, then many passive investors, that's not what they're looking for. So the way we structured my very first one, I wanted that debt, and you can only kind of get that debt if you've had that debt. So I gave up quite a bit, right? So I only brought $100,000 to the deal. Another more active guy also brought $100,000 to the deal, but we found a partner who wanted to be active and would bring $1 million, right? So I own 10% of the deal. The other guy who brought 100,000 owns 10% of the deal, and then the other guy owns 80. So we kind of divided up ownership commensurate to dollars in proportionally.
Great. That's great. And just a quick question, Teresa. No, correct. When you have a JV, there aren't private lenders. It's not structured in that way. You can work with private lenders to fund a deal. That's a whole other conversation, right? But in terms of what you're saying, it's a partnership, more on a partnership level than a lender relationship. So just wanted to share that. Quick point I want to make with what, and then I want your thoughts on Camilla. I want to just mention something with Mandy saying, active and passive is a really important part of the syndication puzzle. Syndication, you're going to have passive investors. They literally are just, passively investing in the deal. For the number of first of our projects, we were able to get into smaller deals with other active partners. So it wasn't necessarily a JV. We actually created a new entity, 123 Main Street LLC. They had a role beyond money. That's very important. Beyond money, they had a role in the company. We had a role in the company. And one partner could put the money in, one partner doesn't have to put the money in. As long as they have active roles beyond money and investments, you can create a new entity and your equity partners. We didn't need to syndicate buying 2 single family homes. So again, the size of the deal could dictate a JV opportunity or more of like, we're going to join arms and create this new LLC and this new company together. And as long as you're careful with how active and passive people are, that's the key from a syndication perspective. And my husband, Matt, actually goes through that very specifically in his book around, it's called The 4 Prongs of the SEC. And you really want to make sure you're adhering to that. So you're not, because people talk about it on the Facebook community all the time, right? There you go. People talk about it all the time. Me and Joe's putting $100,000 into a project. And meanwhile, Joe doesn't have any sort of role in the company except money. That's passive. That's where you're going to get into trouble, and you want to set yourself up for success, obviously. So I wanted to mention that part. Camilla, when it comes to syndication, what are the benefits beyond obviously getting into larger deals? There are a lot of benefits, right? You and I can list off a bunch, and I'm sure Mandy would attest to that too. So what do you see as because you've transitioned, right, from single family to now on the side of much, much, much larger. So you've had your hand in various size projects. And you're focused on syndication now and raising for various projects. What would you say is, why did you choose to go that route? It's helpful to hear.
So one of the reasons I chose to go that route is because in syndication, there's very defined roles about who's doing what, right? So typically you have a lead sponsor, and the lead sponsor is the one who I think of them as the leader, right? They're the leader of the project. They're the ones that shoulder the stress, the burden of anything happening. They're the ones that like direct the team, that make sure that that the deal is good, that sign off on it and say, okay, yes, this is a good deal. This is one we're going to go after. Of course, all the other partners can give input or whatever, but there is that main leader that is the leader of this group. Then you have people who are, part of it, also part of it. So sometimes you'll have an acquisition specialist, a person who's out finding the deal. They're the ones that are talking to the brokers and doing all this. You'll have the capital raisers like me, or co-GPs. We're called co-GPs. And there's people who serve on the asset management team on the back end. So the appeal for me in syndication was I had spent 15 years DIY and literally DIY. I launched my own property management company. I'd go mow the lawns. I'd take the calls at 2 a.m. I was everything, and I frankly was burnt out, completely burnt out. So when I was looking at my options, what can I do to still invest in real estate? Because I still believe in real estate, but I just couldn't handle the stress and pressure and frankly, that work, right, that comes with it. And I wanted to get an apartment complex, but I didn't know how to do it. Syndication felt like a good answer for me because then I didn't have to do everything. And that was so appealing to me that I could just focus on one little piece of it. And you have to figure out which piece you're going to fit into, where your strengths are, how you're going to help a team. You've got to convince a team to, bring you on board to help them with this syndication. But once you find your lane or where you're good, it's pretty amazing the opportunities that start to open up and the things that start to happen with partnerships and it's easier to grow in that aspect for me in syndications. Now, JVs for me has been a hard nut to crack, and I'm still trying to crack it, right? I'm still trying to do a JV, but I'm freaked out about all the work of finding my own property and doing all this. Am I going to be back in these, in my DIY mode again? And so there's a lot. And look at Mandy. She's like, come on, Camilla, you got mindset issues. But syndication to me was a great way to allow partners into my life and let them take the load off of my shoulders and so that I could join in a group and not have to do literally everything.
Yeah.
So I do want to say something to that point. So I have been a general partner on a 104 unit syndication, a $12 million deal, right? And I've been a joint venture partner on a $5 million deal and a $3 million deal, right? And in the work that I did to take down the 3 and the 5 was the exact same. For me, my involvement was the exact same that I did on the that I took down the syndication, right? But the difference is, yes, I put more capital into the 3 and the 5 than I did the 12 that I syndicated. But I raised over $1 million. I did all the same due diligence. I did, the vetting and all of the working with the passive investors who came on board. What percentage of that overall deal do you think that I own, having done all the exact same work of the syndicated deal? What percentage? Maybe throw it in the chat just to appease me a little bit.
Get a little crazy. Let's get a little, make sure everyone's still with us here.
Wake up, people, wake up.
Wake up here. No, throw it in the chat box.
Yeah, what percentage of the overall deal do you think
3 to 5? 3 to 5.
What else you got? Anybody?
I got one person, 3 to 5. 2, 3. Oh, there we go. 5. 20.
$20. No. Okay. So think
20.
about this. What we're saying is that the overall pie is 100%, right? And the general partnership takes 30% usually, 70% goes to the limited partnership, the people who brought the money. Then the people putting together the deal only own a portion of that 30%. Well, I owned 5% of the 30%, which is roughly 1.8%. So I did all of the same work, and instead of 25% of the deal, I own 1.8% of an overall deal. And oh, by the way, that I'm usually on multifamily things with a bunch of bros, and they're like, oh yeah, I have about 6,000 doors under management. Well, okay, well you own 1.8% of that. So of the 104 unit property, 1.8% is a duplex, roughly, right? So like, I feel like,
Hmm.
sometimes the syndication, like, gloss or the prettiness of like, I have a billion assets under management. And I've had with really big names this exact same debate that, if you look at the pack of people who are acquiring multifamily, the most of them are doing them in the syndication form. But the leaders, the billionaires, they buy for their own accounts. So I want to do what mimics the billionaires, the leaders, and do, I think there's nothing wrong with doing a syndication, but you have to make sure your ladder is up against the right wall before you're going to keep climbing. So for me, I want to mimic the billionaires in a baby way, which means locking arms and buying a $4 million property on that really good debt, because that's a rich get richer kind of play, I think. And it's, in my experience, of those 3 larger deals that I've done, it is the exact same work, but I have more control and more money coming out of it.
I have some things to say about that. That's really great perspective. I love that. I really do like that perspective a lot, because what you're saying is that, your efforts, right? You're making a great point about what input the effort is and what the output of what you're getting. The only thing I'd say that's interesting, I'm thinking about my own experience, right? My own, because that's been our trajectory, is been syndicating and growing from small to large syndications. I think the other element of it is what kind of business people want to build, right? So if people want to build a syndication business and you want to be on the GP side and be that key principal, if you will, like you were saying, Camilla, and you're the one that's putting the team together, looking for the opportunities, you're building one type of business. And if that's what business you build, then the effort you're putting into a 16 unit is the same effort. Well, not same, because it's a big raise. So again, where are you headed and where are you going? What kind of business are you building is also the piece of it. I know for us, when we've sold a syndication and we've gotten money back on that, we're putting that into like, how can we do wealth building activities for the Faircloths, right? So because the syndication has a lot of owners, right? So there's a bunch of pieces to the puzzle. But I think knowing where you want to go and what kind of business you want to build is also part of the puzzle, because it all plays out in different avenues. What you're saying, Mandy, is right on, and from that perspective. I think about our path, and it's just, that's the path we chose, right? That was the type of business we wanted to build. Doesn't mean every deal is that way either now, though. Like sold a property and we're deploying money into we're passively investing, right? I want to passively invest more deals. I want to be my investors, quite honestly.
Yeah.
Right.
Yeah.
So,
I completely agree, but I guess I will shut up after this, so I'm not hogging the mic. But the way that I look at that is like a syndication. It's like, it's a big flip. It's a 5-year flip, and you get a big chunk of money at the end. That I call that one-time money, right? The buying my thing forever that's going to pay me every single month. I call that my forever money. So I love doing, engine for cash flow, one-time money things with express purpose of filling up my forever money bucket. You kind of need one hand to wash the other, but I'm just saying, I'm imploring, especially syndicators, to not neglect that forever money bucket. So Camilla, I have to find a JV for us to do.
I'm in. So one thing too, Liz, I wanted to bring up is the untold reality of the money that you make as a general partner in a syndication. So I think this is something, and to Mandy's point, right? A syndication, you get paid in 3 ways, right? So first is via an acquisition fee. So that acquisition fee could be a good chunk of money when you close the deal, right? So the day you close, within a couple of weeks, you'll get a nice paycheck in your bank account. The second way is through profit sharing, or there could be other fees. Like you could be on the asset management team and you get another fee. It's very negligible, but then you have the profit sharing, right?
Same.
So profit sharing, typically, again, we're prioritizing our passive investors. So 70% of the profits go to them. And often that means they get all the profit during the hold period of the syndication. There is very little left over for general partners. I see no cash flow. in my properties right now. There's there's one or two that are cash flowing for me as a general partner, right? My passive investments, on the other hand, they are cash flowing me and they're bringing cash flow to me. But then the last way you get paid is, of course, the sale at the end, right? And so you get a split at the end, and that's when your biggest paycheck will happen. So keep in mind, if you want to build a syndication business, you're going to have to live off. If you want to live off that, you've got to be closing deals. You got to be closing 5-6 deals a year for 5 years before they all start selling. And then you're going to be, you're going to be doing well. But it's not a cash flow business like your, long-term rentals are, or your short-term rentals are, things like that. So it's a different type of paycheck. And of course, it's a big paycheck, right? Like one of my paychecks was $85,000 for what I did for that, right? So I get a big paycheck, but again, that money now I got to go put that to use to generate the forever money that Mandy's talking about, right?
Same.
So
absolutely. And I think that's all part of the puzzle of like the active part, the passive part, the lifestyle. Where do you want to be in 1 to 3 to 5 years? Those are the conversations that are important versus should you syndicate or not syndicate? Great question. It's just not the first question you should be asking. It's like saying, should I buy a short-term rental in, New Jersey or, Nashville? Definitely not in New Jersey. No, I'm joking. Poor New Jersey. I'm a Jersey girl. No one wants to buy any properties in New Jersey. We're actually doing a development deal in New Jersey, so it's going to be great.
You are.
We are actually in Trenton.
Giving back to the community.
Where we got our start. Not to go off on a tangent, but the key is to say, is this strategy to get me closer to my goals? That's really, especially as you enter in 2023 and you're looking to goal set. Don't get enamored by the strategy. Don't get enamored by the market. Don't get enamored by the person that's giving you the podcast talk. It's really about you and where your goals are and what will align to the goals you're after, because they're not all created equal. And another, I think it's a big focus in our world.
Yeah. And another goal of mine is creating impact. Mandy and I were just talking about this the other day. Like we're both chasing impact, right? Like we want to create big businesses, but for the reason of impact. And one of the things that I actually really love about syndication is that I do 80% of my syndicated deals are 506Bs, which means they allow non-accredited investors into these deals. So I really want to help people get their first million, and then they can kind of grow and do this. And so like my last deal, I was letting people in at a $35,000 minimum. So people who have $35,000 to invest, who have families, who have kids, who have super busy lives, have W-2s, they want to invest in real estate, but they just cannot do it alone. So I really love syndication for that because I am blessing their lives by bringing them these real estate investment opportunities so they can diversify out of the stock market. They can get the tax benefits. Like there's so many great things for passive investors. So it's one of the reasons that I will continue to syndicate and do that. So I can really impact the lives of not only the residents of the apartment communities that we're affecting, but the people, the actual investors who need something like we have, right? That they can't get on their own. So they would not be able to JV, for example, because they can't put in the work that it takes. Yeah. So I will continue doing that. And so it's just a different animal. Like, I just don't think that here we are, like, debating, is syndication better than JV better than syndication? No, neither is better than the other. They're both different types of investments. And I think, it's good to have both, right? Just like it's good to be active and it's good to be passive, to really diversify yourself and your portfolio and just come to terms with where you are yourself and what's going to help you and your family feel happy and good and, move forward with what you want.
So what felt like I'm sorry, what felt like an appropriate incremental approach for me? Because I mean, if you're learning syndication in one of the guru type things, like a lot of good comes out of that. This is that my intent is but like the encouragement is to go buy 400, like don't bypass everything else, go do 400. What felt authentic to me was to do this more incremental approach that I did a 4 and then a 6. And then I bought into a syndication. I was a limited partner, so I could see what that looked like. And I did it with a team that was willing to let me peek behind the curtain so I could see what the larger stuff looked like. And that's when I felt good to go do something larger on my own. So understand that these are all things that can kind of work in tandem.
Yeah. And I think I've got a lot of questions here. Well, I'm gonna be mindful of time, but I'll try to run through as many as I can. And Lynn, you asked the first question. You were asking Camilla, is your experience as a general partner or a limited partner? I think your experience is both, and same with you, Mandy, same with me.
Yeah, both. I started limited and then moved into general, and I do both still.
Yeah, and sometimes you could be both. Like our recent deal, we were on the general partner side, and we also became a limited partner in the deal. So we actually
in your own deal, you can
in our own
yeah,
deal.
do
We're
both.
literally a limited partner and a general partner, and you know, what have you. So it all varies, but you know, again, limited in not necessarily funds, but limited in control, and limited in
Right.
also you know, if something happens, right, you're limiting that person's ability for anyone to be going after them. They're limiting that. That's the whole point, right? So think of it that way. So Sonia, you're asking, I think you're asking this to Mandy. How did you go to a fourplex to multiple deals, and where did you get all your cash flow to keep doing those deals? That's probably
That's one of the things, right? Like if you're going to be like doing these types of joint ventures, which are like my thing that I run after every single day, if you like get to the point in your investing career that you're deploying $100 or $200 or $300,000 a pop, if you're your friend Mandy, you run out of money pretty quickly, right? So in order to fill up the bucket of forever money, which is my end game, then you have to do these, you know, one-time money engine for cash flow type things that like, that's, you know, Camilla and I have commiserated on like building businesses. We've talked about like, I bought a motel that throws off more cash flow, like doing syndications is a thing that throws off cash flow. So you have to do things that, you know, create cash flow for you to be able to reinvest. One thing that we did was kind of like a Burrett scale. Long story short, we bought for 620,000, put in 1.1 million. It reappraised at 3.8. I own 25% of that, 3.8 million reappraisal on a 1.8 in deal. And I own 25% of it instead of 1.8. Now we own it with no dollars in on an agency debt loan. So that is, if I could do that every day, I want to do that.
Love that. I love that. And you can, and even when you syndicate, you can, when you refinance, you can start buying out your investors. We own a 49 unit in Pennsylvania. It's one of our favorite assets. And we have a very small amount of investors on that. However, we refinanced, and some of them just, it was the right time for them to exit. We were like, okay, how do we own that building, you know, as much as we can of that building? We just, you know, so it's all like, again, looking at where you're going, where you are, and how do you redeploy and make sure everyone's taken care of. So let's go through a couple of these. This one, Stacy's asking, have you come across any investors who have syndicated and now are going to refinance and did not underwrite for the current higher interest rates? How do you see this impacting the real estate market? Yeah, this is a huge deal right now.
Yeah,
you want to take that, Camilla?
Impacting. Yeah, you bet. I mean, we have a deal right now that was on a it's a 250 unit in Arizona. It was a $60 million acquisition, and the loan that the kind of debt that was put on it was was a bridge loan, right?
Yep.
And a bridge loan is one that adjusts, that the interest rate will adjust. So suddenly interest rate adjusts, and now we are withholding distributions, right? Because nobody expected the interest rates to go up as fast as they did. In our underwriting, we anticipated an interest rate hike, that it would be higher because we knew we were really low. Nobody thought it would jump, 5, 6, 7, 8 points. And so now that's where we are in the market. And so it's just, this is the nature of real estate, right, ladies?
Yep.
Like, this is one of the things that happens in real estate, is that the unexpected happens, and you figure it out, and you pivot, and you make it different. And so that's what we're doing right now in our thing. So of course there's going to be challenges and issues. I don't think it's freak out worthy though.
Well, there will also be silver
problem.
linings, right? Yep. Like if you
Mm-hmm.
look, a normal bridge loan is 3 years, 36 months. We have been ticking, like I love reverse engineering everything. The only way I ever achieved a darn thing in my darn life is by reverse engineering. So 36 months is a normal bridge loan. We have been ticking up in interest rates for 10, 11 months now. So that tells me in like 12, 18 months, we're going to have a huge bolus of potential deals. So your friend Mandy is working to get as much powder dry as possible for 12 to 18 months from now, because I think the bigger stuff that really has a problem, resetting debt, is going to be, hitting the market in that time frame.
Mm-hmm. Mm-hmm.
And what's beautiful about real estate, it's the long game. You're in
Yeah.
real estate for the long game, even in syndication.
Yeah.
You said 5 to 7 years and you'll hold it for 10, that's where real estate's forgiving. And that's where you're playing, you have to keep the long game in mind, and you have to stay what's in front of you to do. And then you keep doing that. It's like, the next best thing. What was the Frozen 2? Great movie. And she says the next best thing with me. All right. We got a few more minutes for a few more questions here. Miss Rochelle Day, Mandy, what if you brought in only 10%, but brought more expensive or sweat equity, bringing the deal and so forth? Would you negotiate more of a percent of ownership? I think you were going through one of your examples. And that's
the
what she's
53 unit, the first larger joint venture thing that I did. Yeah, absolutely. You could do that. However, the nature of these loans, the thing that I'm running after the Rich Get Richer, Freddie Mac small balance loan program that I told you to Google, you have to have had it to go get it, right? So the thing that mattered most is that I get that on my investing resume so that I could go pursue it in the future. So I gave up more ownership than I necessarily probably needed to. Like now I would negotiate harder because that's not a thing that I need anymore, So you just, again, reverse engineer. You got to figure out the thing that matters most to you as a next right step. And then you're going to get where you want to go faster.
Yeah, absolutely. Okay, cool. How about contracts, Jennifer? Do you use professionals to write up the JV or syndication contract with other investors? Also follow up and manage the share distribution to the investors? Yeah,
100%.
100%.
Always use a lawyer for these types of investments, especially in syndication, right? You cannot do it without a lawyer. You need a specific SEC lawyer. Don't just use a regular old lawyer. They won't know what they're doing. So yes, but then JVs too. You always want the stuff like that in, with a lawyer and in writing, so everybody is clear on who owns what percent. There's no napkin stuff here.
And you have to remember, on the syndication side, we have close to 500 investors, right, in our team. So like that's a business. Who's managing those folks, their K1s, what questions they have. It's a whole level of a business where, and when we had 5 investors, I was like, me and Matt were just answering everyone and connecting with everyone. And so you really have to think about whether it's 5 or 500, it doesn't matter, but this is your customer, right? Mm-hmm. So who's managing their financials, who's managing questions, and how are you keeping them updated? Communications. If you work with any money, private money, you should have a communication plan in mind, whether it's a lender or as an equity partner, passive, active. If you're not keeping these folks who are either lending or working with you from a monetary perspective and in the loop on a very consistent, proactive basis, Camilla and her team are letting those folks know what's going on with that project. And all the syndicators are dealing with the same thing of interest rates going up and what's happening with the projects. People should be in communication proactively. So again, good sign. That's a good sign if they're doing that, bad sign if a syndicator is not, or even a partner is not. If you have one partner, you should be updating them, especially if you're the local person and they're in another state. Communication is everything. So I just want to, not that you asked that, but I just want to say that as we're going through these things. I just want to say that. Okay. What do you think, Mandy, on this one? Is there more risk as a JV partner versus a general partner in a syndication?
Well, depends on how you look at it, right? Yeah. So you're risking other people's money, right? Which the whole reason, all of my cards on the table that I wanted to do something bigger with my own money first is because I was too nervous that, oh my God, maybe I can't trust myself. And I need to do this all on my own first. And then I know that it'll work. And then I can go do this with other people's money. I wanted to make sure the larger stuff worked, right? So you're risking more of your own money. And if you're a joint venture, but you're risking other people's money, which seems way more scary to me, honestly, than the converse.
What do you think, Camilla, on that one?
Oh, it's a huge responsibility for sure,
Yeah.
right? I mean, the weight on my shoulders for,
Yeah.
and it's funny because I was talking about I wanted weight off my shoulders, so now I'm partnering, but now I've got weight on my shoulders because I'm responsible for, I've raised over $10 million from people to come into these deals, and so there is definitely a huge responsibility there because this is hard-earned money, especially because a lot of mine are non-accredited. This is their first time ever investing into a deal. And they're counting on me to have it be a good experience, and I want it to be a good experience for them so that they'll do it again and again and again, and it will bless their lives and bless their families' lives, and all of these things. And so it is definitely a big responsibility and one you have to take seriously, and can be just something to keep in mind. It can induce anxiety for you, right? If something starts to go south with a property like the property I just talked about, where we're not doing distributions anymore. As soon as we send out that notification to investors, I've got calls on my calendar from investors that want to talk about it. And I've got to talk to them and help smooth things over and talk them through and just be open and honest and transparent with, this is how real estate works. There will be challenges, and just kind of help smooth it over. But yeah, definitely huge responsibility, and one not to take lightly, whereas because they're counting on you. They have no say in the property. They have no responsibility to make sure it works. It's all on you and your team.
Absolutely. I don't want to mispronounce your name, but Josette, Camilla, how do we get information about your syndications? So if you want to, and what would be the minimum required? So if you want to put both of you put your information in the chat box, that'd be great for those who want to
betcha.
Follow up and connect with you both. So I want to be mindful of everyone's time, and both of your times. You both have shared so openly and generously. So appreciate that so much. Let's end on this. What would be one, as folks are considering both and getting creative with deal structure and when to use which tool in their toolbox, right? What's one kind of takeaway action step, something that everyone can leave with as they're navigating this? What would your takeaway be, Camilla? And then we'll say goodbye.
So, I mean, my takeaway is don't be afraid of the big stuff, right? Like Mandy and I are doing big deals. We're doing multi-million-dollar transactions, and it's not because we're special or gifted or talented or any of that. We're just willing to try, right? We're willing to try. We're willing to fail. We're willing to take a step every single day and just kind of figure it out. So don't shy away from the big stuff, but also don't hold it as the holy grail, like, oh, maybe someday I'll get there, or, whatever. You've got to figure out yourself first before you can really step into the right and find your lane. And once you find your lane, it'll feel great. It'll feel like home. It'll feel like, yeah, this is what I was meant to do. This is where I need to be in my purpose. And just think about purpose, chase impact more than money. The money will come for sure.
Good stuff. How about you, Mandy?
The thing that we spend our whole first month in the Small Multis pod talking about is you've got to begin with the end in mind. And I've already said it here today, and it matters so much to me and how I've found any success in my life. I've pulled off a lot of weird stuff that I maybe shouldn't have as a small town kid, and it's all because a reverse engineer thing. You've got to make sure that ladder's against the right wall if you're going to do all that climbing, right? So figure out what you want out of that deal. Is it something that you need a one-time money event? Great, go syndicate it, and then have those profits at the end. But if it's something that you're looking for forever money, generational wealth type thing, consider trying to do something that you could own long-term on these better types of loans. So, you got to begin with the end in mind, and, seek out a tribe who's doing the stuff that you want to do, because Camilla and I talked about this the other day too, that, we're just little girls who just asked some big questions. And now we're in this spot that we're all right, how do we net $1 million this year and say it out loud in a way that we're freaking proud about it? Because that is the next bananas goal that we're going to chase and figure out, So get around a bunch of people that are doing things bigger than you, that are doing things like you, and just run straight at it.
I love it. Heck yeah. Paulina said, and I'd also say, I would say that the whole adage of the journey of 1,000 steps starts with one, like you both are saying. I think dream big, but don't let the dream get in your way of taking small steps. And that's what we really encourage in this community, is just like micro steps. And if syndication is something that you see as a strategy for yourself, then take some small steps to move you towards learning about it, being around others, being part of a syndication yourself. I think one of the best ways to do it is also to be an LP in a project. Say, what's your minimum? I'm going to invest with you. And then you watch what they're doing and how they're doing it. And even better, if they have an educational component, be part of every call. They have roundtables, they have this, they have property tours. A lot of syndicators will open the doors to your asset. You are an owner of that asset. That's the kind of stuff that $25,000 or whatever the minimum is. That's what people pay to get the education, let alone to actually invest and also get dividends and be part owner. So there's always ways to do it, and just know your worth and know where you want to go. So both of you, thank you so much for being part of tonight. I think we got into some great discussion. It's a big discussion that can continue, and know that we have a community behind you all to continue this discussion. These two wonderful women are valued pod mentors. So if that strive at all interests you, you're a woman who's growing 5 to 10 deals, check more out on our website about it and join us till Friday. Our doors close. So thank you again so much, everyone being on. Camilla, Mandy, you're both amazing. Thank you for being on.
Thank you guys. Love you.
And both,
Thanks,
check
everyone.
check these two ladies out too. They're doing great things. All right, everyone. Happy holidays. We'll see you soon. Bye, everyone.
Bye.
Ciao.
Ciao.